Alrighty, welcome everyone to today's Sunday macro wrap up for Sunday, January 26th, the last Sunday of January of 2025. Man, that seemed like it was a pretty long month there. Still got another week somehow. And yeah, we got a decent amount of stuff to talk about today. Obviously, last week was a little bit light on the macro data, right? If we take a look, really the only thing that really stood out to me was not only existing home sales as well as the flash manufacturing and services PMI, but it also was the leading economic index continued to decelerate, right? And so right now, this is basically classified as mixed market data for growth, right? We still continue to get inflation data reaccelerating, but in terms of actual growth, as far as like GDP and things like that, it's a little bit mixed, right? We're seeing some industries and manufacturing sectors not rebound as fast. And then the services sector is actually starting to have a little bit of a slowdown as well. So, um, people on Wall Street will call that normalizing, but even if you have a slowdown in some metrics after they've been accelerating for a while, that is technically a downward sloping rate of change. And so, that was one thing that I was noticing last week, but really, the main focus was the barrage of executive orders that President Trump signed, and the market really doesn't know how to price some of these in, right? I believe there was 26 executive orders. There's a little bit of a summary here, but in terms of like the exact market reaction, it's something where the markets just haven't had this type of fiscal, I guess, activity in a while. So I mean, I think it was if you look at the total, right, on day one of presidency, you look going all the way back to George W. Bush in 2001. President Trump signed 26 executive orders on his first day, right? So the market is like, this is something brand new. Um, Not to say that the market is solely going to react on things, but I mean, obviously, you see markets like cryptocurrencies where if Trump just says one thing about Bitcoin or a crypto policy, I mean, just take a look at a chart of Bitcoin, right? It's been going uh, up pretty well over the past week or so, even though today it's having a little bit of a correction, but it is weekend low volume. And so, as we continue to look to this week, right, there's a lot more activity in terms of macro data. The first one being consumer confidence on Tuesday. And then on Wednesday, we have the Fed FOMC press conference, right? That's the first Fed meeting of the year, where the market has already priced in a pause at this point, right? And so all that matters is during the press conference, whenever Jerome Powell is being asked questions, what are those questions going to be? And how is Powell going to react, right? Because one of the reasons, or really the main reason, why the market had such a negative reaction last time was because of the sole fact that Powell's tone, as well as just the way that he was, addressing some questions, that was way different from before, right? He seemed a little bit more flustered. He was stuttering on some words. He seemed like he wasn't confident, and he was, generally more hawkish than he was previously. And so, um, for all those different reasons, that's why you pay attention to the press conference. Because nowadays, this isn't like, back 20 years ago where the surprise was the actual decision. The Fed does what's called forward guidance and tells us in advance, what they're going to do. And so that's why you can see right now when we take a look at the Fed target rate probabilities for this meeting, there's a 99.5% chance that they are going to pause rates, right? Meaning they're not going to cut us. And so that's pretty much already priced in. We just have to see, what Powell actually says when he gets asked certain questions. What I would like to see is I'd like them to address the question of inflation reaccelerating, right? Because that was really the main question that they got asked last time, and they had said that they messed up essentially, right? And so that's going to be the big update there on whoever asked them about the inflation question. When we take a look at the inflation nowcast for this month, it's a little bit lower from the December print, which was 2.9%. I'm looking at headline CPI right here, as well as core PCE remains lower as well. So just like how the previous headlines were focusing on core CPI, how that came down marginally. If they focus on any one of these metrics, if it becomes better than expected, that's what the news is going to print. And so, if we get a lower PC number, that's going to be something that the Fed is going to, highlight. And so we'll see how that goes. We really don't know until the press conference happens. But what we can observe is the setup heading into the press conference, which is what we're going to be talking about once we get to the charts here. And so when you take a look at the real GDP estimate for Q4, that's at 3.0% as of right now. When we take a look at the probabilities for the advanced GDP number that comes out on Thursday, right? That right now is priced in at 2.7% is the forecast. So if it comes in higher than that, that means that, in an environment where growth and inflation are accelerating, that's really where, stocks, high risk assets like cryptocurrencies do well. And so, that'll be interesting to see if it comes in hotter than expected and how the market will react to that. Um, and so, one of the reasons why I continue to see that inflation is reaccelerating is because we're getting, the commodity index reaccelerating as well as the oil markets, right? So if we take a look at a price of oil here, let me just bring it up. Yeah, oil, even though it's had a little bit of a correction here, it does remain in bullish trend. And so, this is something where it's coming to a place where, I might buy some more here. But, it has come down to these lower levels here. If it continues to go down, that'll actually help out the inflation case. But, when looking at the CRB commodity index, we're just not seeing that just yet, right? And so I believe the energy component is going to continue to do well, which will end up contributing slightly to inflation. We'll see how the other components come down. And so let's go back to the charts here. Yeah, so core PCE, that's going to be a big determinant. So compared to last week, which there really wasn't too much macro data, this next week coming up it is a whole lot of macro data plus, anything else that Trump does. So just expect some volatility. Not saying that volatility is a bad thing. You could have volatility to the upside. But what we'll do is we'll get into the charts here. Taking a look at the S&P 500, it closed at a new all-time high on Thursday, right at a time where, a lot of the market was completely bearish, right? So one of the things that we track is investor sentiment. And as we saw, or 2 weeks ago, there was a deceleration down to the lowest levels that we haven't seen since November of 2023. And then that was a pretty good time to be a contrarian because the following week, the market closed at near all-time highs. And so as a result of that, you saw a big jump in investor sentiment. And that's why you have to make sure that you're being a contrarian at extremes because, it could blow up in your face if you're following the crowd. That was one thing that we were talking about 2 weeks ago with being too bearish at the wrong time with the crowd because, just like we're seeing right now with the index, it just completely went vertical. Now, that's important to consider when, we're looking at the setup heading into the FOMC press conference, right? So our philosophy here at Macro Optics is that when it comes to these big events, whether that's a CPI report, Fed meeting, inauguration, any of those things, what you want to do is you want to de-risk as much as possible, but you also want to really observe the setup across the different things that we take a look at heading into these events, right? And so right now we have, an accelerating S&P 500 over the past 2 weeks. We've also seen that market breadth, which is the percentage of stocks in the S&P 500, improve a lot, right? So this isn't just a rebound in the mega cap tech stocks, right? Seeing that market breadth is improving from where it was low, That is also showing that there's a broadening out effect with the rest of the stocks in the S&P 500, right? So a lot of them that were down a lot um, over since December, those are having a rebound. And even if we take a look at the S&P 500 minus the mega caps, it looks very similar to a chart of market breadth, right? And so, as you can see, the majority of the index in the S&P had a pretty terrible December, right? That's the opposite of a Santa Claus rally. And then it's really just had a bounce here, and it still remains, it's almost a neutral trend, but it still remains bearish here. So you still have to be a little bit cautious because if this continues to head down again for another leg down, that could be continuous pressure on the S&P 500, especially if, since there's a large concentration compared to this time last year into the mega cap tech stocks, right? So, talking about Apple, Nvidia, Microsoft, Amazon, Meta, Google, and Tesla, there's a large concentration into these seven mega caps. And it's not just the United States, there's a global concentration into the mega caps as well. There hasn't been this large of foreign investor investment into these major stocks, right? And so really the global financial markets rely on these huge stocks staying as big as they are and not going in a reversal trend. So, you know, we're that's why you guys are in this community and you're paying attention because we track things like that. But at some point it'll happen. We just don't know when, as well as what magnitude. But we're for sure going to let you guys know when we see signs of that. If you guys want to be long, if you guys want to be long the mega caps, there's an ETF MAGS, and this has done fairly well. In case you didn't want to like just individually own all of the mega cap stocks, you can use MAGS. And then also contrarily, if you want access to an ETF that has exposure to the rest of the index, that is XMAG is the ETF for that. All right. Looking at the NASDAQ, that also had a pretty good bounce and that remains in bullish trend. The Russell 2000 small caps, not so much. It almost has a similar, dynamic looking as the S&P 497, right? Or 493. And so this remains in neutral trend, but could easily go bearish again if it has another leg down. So there's better things to own than Russell. So we have those highlighted in the selection model. Taking a look at the different sectors of the S&P 500 heading into this next week. As of right now, there are 6 sectors that are currently bullish. We have communications, consumer discretionary, energy, financials, industrials, as well as tech. Namely, tech as well as energy are starting to have a correction here. So we will be looking to buy some things on red. That's how we do our process. We never chase green. Always when we have dips is when you want to start thinking about making positions at the low end of the trading range. And so the sectors that are bearish are real estate, REITs. We also have materials in bearish trend, healthcare, as well as consumer staples, right? So those are the bullish and bearish sectors. Taking a look at the volatility index of the S&P 500, the VIX, that remains in bearish trend, which is bullish for the underlying asset, right? Seeing where we were when there was peak fear, look how high the VIX got in, around the 22 level, which we haven't seen in a little while. And then one of the sentiment indexes that we like to look at, it's really a ratio, which is the VIX over 3-month VIX ratio. Essentially, what this when looking at this chart, when it's around 1.0, that's typically a very bearish market sentiment. And then when it's at 8.0 or 0.8, that's typically peak bullishness. So we're not quite there yet, but as you can see, like during those times, it could stay there for a little while, but those were fantastic times to take some off the table in terms of if you were along the S&P 500, right? If we overlay this scale here, you can see how there's a little bit of a opposite correlation here, right? So that's the way that we look at it there. Hopefully that makes sense. If not, just let me know in the comments below. But if you guys want to add this to your TradingView charts, all you have to do is type in VIX and then that by VIX 3 month. So taking a look at credit spreads, or I'm sorry, not credit spreads, the 10-year government bond yield, that remains in bullish trend. I had someone ask me on a live stream this week, are you bullish on bonds yet? Should we buy here? I think they were specifically asking about TLT. And so as this it could be the bottom, but really you don't know if it's the bottom until it already is the bottom, right? And it's already gone up a lot. And, it technically remains in bearish trend as yields remain in bullish trend. And even if this is the bottom, this hasn't reconfirmed its bullish trend yet, right? And so one of our other philosophies here at Macro Optics is you want to make sure that the trend is confirmed before you buy the dip and make a core position, right? Because if you're wrong, then that could be devastating to your portfolio, right? There's not really any point to try and predict tops and bottoms. I'm sure you've heard, that famous saying, timing the market is worse than time in the market. We do like to time the market. We're just a little bit more conservative on it, right? And so using our math metrics, what we see is that let's say that there's a break of structure where TLT goes up to like 90 and then it has a correction, we might buy it at that point. But as of right now, bonds still remain in bearish trend. So we're just not going to risk, trying to be a hero and time the bottom. There's really no point. There's other longs that are doing very well, that are presenting better opportunities. But as of right now, the 10-year remains hot. Same with the dollar, right? So even though the dollar's had a little bit of a correction here, it also remains in bullish trend, but it is starting to lose some momentum here, namely from a lot of the different metrics with the Trump policies, as well as we had Japan raise rates to levels that we haven't seen since, I believe it was 2008, the great financial crisis, where they had rates this high at 50 basis points. Um, so, a strong yen is obviously going to hurt the DXY. Just a reminder, the DXY dollar index, this isn't necessarily the strength of the US dollar. It's the dollar compared to a basket of other currencies. Like I believe it's six other major currencies. So it's a relation ratio valuation of the dollar, not necessarily the actual value of the dollar. We've seen charts of that, and it keeps on being inflated away and devalued. So just a little bit of a reminder there. A lot of people have been asking about AI tech stocks as well as quantum computing stocks. Those have had a little bit of a dip as well. I wouldn't be surprised, with this whole infrastructure bill or infrastructure executive order that Trump passed, that you might see some more speculation in those types of names. But I mean, if you take a look at something like AVGO, it still remains in bullish trend here, right? We can take a look. We can take a look at some other um, AI stocks as well as quantum computing stocks once we go to members only and stop the YouTube stream. But those still remain in bullish trend. I wouldn't be too scared about exiting those, but always make sure that you're using our risk management process to take profits and add back in when appropriate. Taking a look at credit spreads. So this is the spread or the difference in percentages between between corporate bond yields and the risk-free rate of United States Treasury securities, right? Bond yields. And so when this is falling or in bearish trend, that means there's a lot of risk taking in the markets. The difference between those percentages is very narrow. And, we've had a very large drop off in the last week. There's no surprise that the markets had another all-time high, right? The markets like when this thing is in bearish trend, and it had a very rapid deceleration back to the low end of its ranges that we saw in mid-November, which is where there was a lot of excitement in the markets right after the election results, right? And so that's exactly where we're at right now. And to me, this is really saying that this is a good time to, take some off the table again. Could this end up going lower? Sure. But it is what it is at this point. And so yeah, a lot of the people who are FOMOing into the markets, our group is making sure that we're taking some off the table, and that's how we stay ahead of the crowd there. Um, what's also interesting is that credit spreads, whenever they're narrowing like that, we see different cryptocurrencies also accelerate, like Solana. Um, it's interesting if you go to, let me go back to the credit spread chart, and then what I'll do is I will overlay Solana and invert it so that you guys can see this. Where is the invert scale? So Solana is in red here, and it's pretty funny how well it reacts to narrowing credit spreads there, right? And so this is actually something that Aaron Garfinkel pointed out, and it's something that has really helped us with our different altcoin positions, specifically with Solana. Um, so yeah, it's pretty interesting to see that there, and yeah, Solana also remains in bullish trend. I guess we can segue over to the cryptocurrency markets. Out of the top four, Solana and Bitcoin remain in bullish trend, but Ethereum and AVAX remain in bearish trend. And Ethereum and AVAX look similar to altcoin dominance, which I've pointed out in other videos how this is essentially showcasing how it's not yet a broad altcoin season yet, right? And so I'm sure you have some altcoins in your portfolios that may not be performing as well as you'd like them to in the previous couple months prior. But seeing how altcoin dominance as well as DeFi dominance are decelerating at the same time, we have stablecoin dominance accelerating, right? So this remains in bullish trend. This is actually the real threat to Bitcoin too, stablecoin dominance accelerating. But Bitcoin remains in bullish trend as well, right? And so there's just a hyper concentration, just like how in equities there's a hyper concentration into the mega cap tech stocks. In cryptocurrencies, you're seeing the same thing with a high amount of concentration in things like Bitcoin, Solana, XRP, as well as things like Chainlink, right? Some of these other ones that are in bullish trend, and so there's just a few. There's not very many options, right? You're just having a high concentration, which again, you can still make money in these types of environments, but you have to stay. You have to have your finger on the trigger, right? Because you don't want to just get caught off guard if you have a busy day and then you take a look at your portfolio and it's down like 10%. That's not what we want. Um, Other than that, let's take a look at price of gold here. So gold came right to the top end of the trading range and had a little bit of a rejection here. That has reclaimed its bullish trend, and we will be looking for dips to add back on that. Gold is rate sensitive, right? So if we continue to see the 10-year government bond yield decline, as well as we get more of inflation rising and growth staying flat in a more stagflationary environment, that's an environment where gold does very, very well. And so it rallying like this and breaking structure is very telling. So we will be looking to buy dips on that. And then I really think that's pretty much it in terms of what I'm seeing across the globe. Um, China continues to struggle, as well as, with the dollar coming down off the top end of its range, gold accelerating. We're seeing international equities like European ETFs accelerate. If you take a look at a chart of Germany, Germany's stock market hit all-time highs despite them having a weak, very weak economic data. It's very interesting to just see a lot of these charts continue to go up despite them having a weakening economy, which is why also too, another one of our macro optics philosophies is that you want to give more weight to what the charts are saying, right? Even if, some of the macro data isn't agreeing wholly with the charts, you have to make sure that you're following the trends first and foremost, right? The trend trumps the macro. Um, and so the reason why we even, study macro at all is because once you find a trend that the macro is supporting, that's really when you have those longer term, 3, 6 months, 6 months or more trends where if you're buying and holding it, that could really have a substantial gain in your portfolio, right? So um, although we give more weight to the charts, when the macro and the charts line up, that's where you can, you know, ride the wave very well. But that's pretty much all I'm seeing right now in the markets. I guess what we can do is we can take a look at central bank liquidity, where that remains at $6 trillion. It's actually trying to break bullish again, only because we're seeing a continued deceleration in the reverse repo facility, as well as the TGA had a large drop as well. So yeah, I mean they're still doing manipulation in the markets in terms of central bank liquidity, and then we'll see what happens with government spending. I'm sure you guys have seen a chart of this before, maybe not, but let me see if I can pull it up. Um, hmm, it's not popping up. Hmm. I had it saved, but there's a chart of U.S. government spending, and I'll probably look it up as we answer Q and A's because I do want to show you guys. But if you look at a chart of government spending and the stock market, it's pretty much hand in hand. Um, so, one of the risks that I'm seeing for this year, and this may not happen for 6 months from now, 9 months from now, but if there's a decent slowdown in the fiscal dominance that's been going on, that could be a downward pressure on the markets, right? Those are all things that I'm tracking. I want to make sure that the data and the charts back up my theory. I'm not just gonna, have a theory and then make positions in my portfolio. That's not what you want to do. You want to have a theory and then see if it gets backed up with the numbers and the data. And so yeah, that's one thing that I'm looking at here that I will keep people updated on. But what we'll do now is that we're now at 7:30. I'll go ahead and close out the streams, and then we'll go to members only in terms of answering any questions, as well as bringing up any charts from the asset selections that we have on currently. And then if you have any tickers that you guys want me to bring up, I'm more than happy to look at those with you, and we can dive in there. But for those of you who are watching on YouTube, there. If you want more access to our communities, there's a link in the bio to check us out there. Just click on that. It'll go to the About page. We have a 10-minute video just to go over what we're all about. If it's something for you, you can join there. But until then, we will catch you next Sunday. For people who are staying on the call here, 1 second. All right. So I know that we have some new people in here as well. Karen, welcome. David, welcome, as well as Adam Smith. Welcome to the Sunday Macro Wrap Up. Um, Typically, the way that these work, if you guys haven't seen it already, the format is we typically do 30 minutes on stream, and then the remainder of the 30 minutes, or sometimes we even go 15 minutes over that. I answer any one of your guys' questions. If you guys are seeing posts that I'm doing in the communities that you guys have specific questions about, more than happy to answer questions about those as well. And really, we're just hanging out here for the last, 30 to 45 minutes, and we can take a deep dive into whatever you guys want to do. One second, Stuart. I see your question there. Let me just pull up the charts here. All right, so Stuart asked about UUP, which is the bullish dollar ETF. Has UUP gone bearish on us? I'm in it, waiting to sell. What do you think with it now? Thanks. Yeah, so taking a look at the dollar, where is it here? Obviously we had a decent correction here. It still remains in bullish trend, although it has, lost, some momentum. I was buying some on the dip on Friday, so we'll see if we get a bounce here. If not, if it continues to go down, it's still something that's relatively, it's not very volatile, right? So, I mean, for something like this, you could have a chance of a bounce, but it's something where luckily, if it does go down, it's not very volatile, right? Um, yeah, I mean, if you're looking to get out of it, depending on where you got in, hopefully at the tops end of the trading ranges, like on the beginning of January, as well as this 3 day kind of top here at the beginning of from 2 weeks ago. Hopefully, you're taking your position size to a minimum there on green days. But if you're at a minimum right now, and just wait for a pop, and you can get rid of it at that point if you want. But I mean, it still is remaining in bullish trend, so um, that's why I was buying some on Friday. BBAI and Sound. I took a position in them. Can you look at them? Sure. Yeah, that sounds like a stock that I've. Yeah, so depending on where you bought this, I mean, obviously this is a pretty volatile stock right now. The quantum computing slash AI stocks look very similar at the moment. So I mean, it's kind of one in the same trade. You can kind of just pick which one you like and you prefer. Um, but as of right here, the time to buy, there was essentially a 3 day window to buy at the low end of the range from Friday, January 10th to Wednesday, January 15th, right? That was like a decent entry point. And then from there, you had you had essentially 3 days to sell it for, 30 to 20, 25 to 30% gain right there. If you do have a position, hopefully you're at a minimum, because it does look like it's having a bit of a correction here. But if it does form um, a higher low, then that would be a good time to take a shot to go long again. I don't like how it didn't close at a higher high from on December 31st. So we'll see what happens there. If it does continue to go down and it even closes below this low point here, then that will probably take it to a bearish trend at that point. But as of right now, it is still bullish. Looking at the math, volume has also declined a bit here, but you know, if you were looking to buy this, it looks like it's giving you a shot here on red coming up, and then sound. Yeah, my buddy has been in SoundHound for a while. But yeah, similar, right? I mean, it had a couple days to sell. It's technically forming a lower high. So, if this continues to have accelerated red volume, that obviously would not be good. But yeah, I mean, if it does present, if it does have a red day on low volume, I might consider that an entry point. But um, in terms of the math, this is also technically in bullish trend. I know some of the popular ones that people are talking about is Snowflake. That remains in bullish trend as well, but similar to those other ones, it just formed a lower high here, and then something like AVGO, which is a little bit better looking of a chart. Um, This is at the top end of its range. So, if you had something like this would be a good time to take that to a minimum as well in case it goes down to fill this wick or this gap here. An example of one of the energy longs that we like that has been performing pretty well is something like TPYP. This is actually um, a natural gas ETF, and so sometimes if you want to have consistent growth without a lot of the volatility, this is why ETFs can be good, right? Because obviously it doesn't whipsaw as much as a stock does, but still, if you were, long this for, pretty much since 2023, right? I mean, you're up decent right now. Um, but that's why we continue to be long, natural gas as well as some energy stocks there. Let's see. I know also too, one sector that's been really doing well is the defense sector, right? So you had this massive just acceleration in ITA last week, or in the past 2 weeks rather. And so, a lot of the aerospace defense types of stocks have been also performing very well. I think that sector has been or that industry has been one of the better performing industries. That along the lines of, other energy types of ETFs, such as AMLP, those have been doing pretty well too. But those are at the top end of its ranges here, so you wouldn't necessarily want to jump in. This is where you would want to, take some profits in order to buy lower. All right. Adam
Kennedy,
Smith.
I got a question about market futures.
Sure.
Taking a look at the futures right now for all the major indexes, they're down right now, but and it's kind of a lot. Some of them are down a lot, and I was wondering what is the correlation between a market future and what the market's going to be doing like that day, that the following day.
Um, I mean, there's not necessarily like I mean, there's obviously a direct correlation, but futures are technically a derivative, right? Can be a lot more volatile. Sometimes, it's not always directly, correlated. So, I mean, with, I'd be careful with doing futures, but I mean, if you prefer it, there's definitely pros and cons to it. But um, yeah, I mean, is there a reason why you choose futures over, um, like spot
Well,
pricing?
let me clarify. I don't trade futures, but the word futures, which I don't fully understand, right? But the word futures is an alarming term if you see that everything is kind of down, right? So, like if everything is slowing down, is that a good indication that there's going to be a bearish trend happening tomorrow, or I guess that was my question, was like how likely is that the futures determine the actual future?
Oh, well, they're not like trying to determine the future. These are just derivative contracts, right? Where you're essentially using leverage, and it's just another way for people to trade the underlying asset, right? It's not necessarily like they're predicting because they react just like any type of asset based off of incoming data and stuff like that. Um, but it's just a derivative, right? It's just like the name of the contract is futures, but you know, it's not necessarily predicting the future.
So is it sort of the same kind of concept as trading options would be?
They're different, but there are, some similarities, right? Because really, like with futures, the contract is being based off of it's being traded based off of a price in the future that the market is trying to price in, right? Where, options do something similar, but the way that the contracts are a lot different. But I mean, yeah, I mean, if I would probably, I mean, if I were you, I'd just stick to just regular, spot investing, um, because I mean, if
Okay,
you,
got
because I
it.
mean,
I won't.
unless you want to trade with leverage, I mean, you could do that. But I mean, that's not necessarily like what we're promoting in this group. I know that some people in this group do it anyway and still use our macro data to help them with that. Um, but it's mainly just if you want to, add leverage to whatever type of plays that you're doing, right?
Yeah, to further clarify, I'm not looking to trade futures. It's just I guess maybe I need to do my own more research on it. But like right now, if I see red in the futures, I guess I was just kind of wondering how much of an indicator is that going to be for tomorrow. That's kind of it, but yeah, if it's not a good indication of the actual future of the indexes, then I'll just ignore them.
Well, I mean, you don't want to ignore the futures market, right? Um, because I mean, it still is a pretty interesting indicator of, because it's its own market, right? You want to pay attention to the futures market because, it's trying to, price in certain things, and you can see it trying to price in something even though, um, a different market might be closed at that point.
Okay, I think I get it a little bit. Thank you.
Yeah, it's essentially you can think of it as like the market participants are trying to like people who trade futures are trying to bet on future prices, right? It's not necessarily like it trying to predict future prices, if that makes sense.
So more or less right now, with the Nasdaq futures down 1.2%, there's folks out there that are betting that tomorrow we're going to see a down day in the Nasdaq.
Correct. Right. Yeah. So they're betting on future prices.
Okay. I have noticed that sometimes that never happens and things go in the opposite direction. So I guess
Exactly.
everything's not really not a good predictor then in the long run.
That's right. Yeah. Let's see. We got Raymond on here. I haven't seen Raymond in a while. What's up, dude? Yeah. Some other types of precious metals like silver. It's pretty interesting how that remains in bearish trend, even though gold is in bullish trend. Um, Gold has been doing some real funky stuff over the past couple of years, that's for sure. But yeah, in terms of something like XRP, this might provide an opportunity for us to buy at the low end of the range as well, right? Since it's starting to have a little bit of a sideways correction here. But yeah, the setup heading into next week is pretty interesting. Um, you have, like we just mentioned, the dollar is at the low end of the range. Um, we've had rates come down as well. So I mean, it's almost like, not to say that this always happens, but if you have a setup where the dollar and rates are at the low end of the range, it's set up to where something could take them to the top end of the range, right? And something like that would be a very hawkish Fed during the press conference, right? Conversely, right, if you saw that both the dollar as well as rates went to the top end of the range, going into the meeting, then you might have a more dovish Fed, right? That could bring it down to the low end. So that doesn't always work like that. But it is interesting how essentially what the market is trying to price in right now is a dovish Fed meeting, you know? So it'll be interesting if it gets it. Jordan says, I've been watching CLCO, Natural Gas Shipping Company. Fundamentals look strong. Looks like there's a reversal happening. Check it out. Yeah, so I mean this um taking a look at I do like how volatility has dropped down on this bounce. Um you did have volume drop down as well, right? So for me, what I would like to see is, I'd still give this one a little bit more time just to see. And you have to remember too, like I'm a little bit more conservative when it comes to when I take positions, only because like I typically like to take larger positions in trends that are not a sure thing, but they're pretty strong trends, right? Like for example, like if someone's just trading leverage and they bet $100 on something, what they're doing is they're using high amounts of leverage with a low amount of principal in order to essentially win big, and there's a high risk of liquidation, right? Whereas with me, I don't necessarily mind if it's a smaller move in a very strong trend, but I'm using a larger amount of capital, right? So maybe, I'll place a order to buy, if we just want to use CLCO as an example, maybe um I'll buy 1,000 shares at $8, right? So $8,000. And so, if it, let's just say this is something that's not, let's just say this is something that isn't volatile like a stock. But, if this was continuing in a bullish trend here and it was pretty confident according to our math, I don't mind taking those bigger bets, right? That's just my style, though. I much prefer it that way because if I need to get out, I can get out, relatively easy. Um, and, if you take a look at both myself as well as someone else who might be trading on high leverage, at the end of the day, even if it does work out for both of us, um, you know, I, I'm I, I'm taking less risk essentially, right? Um, Only because the volatility premium of the things that I'm investing in are a lot lower, if that makes sense. But going back to this chart here, yeah, I mean, it's still technically in bearish trend. If anything, this would be a good spot to sell some, in my view. I don't know it fundamentally though, so I do like how it's in the oil and gas sector because again, I think that's like a long-term sector that will do well. But but just taking a look at this chart here, there's definitely other charts that I like better.
That's fair. Yeah, thank you. Yeah, fundamentally, it's like saying at a PE of 5 and a price to book of 0.6. So it was like even if they liquidated their company, there's still money to be had.
Mm, interesting. Interesting. Yeah, I'll take a look at it.
Yeah, thanks, man. Appreciate the insight.
No problem. Yeah, and again, I mean, it's also like my type of style as well, right? That's why I like in the course, like we encourage you guys to define your risk tolerance, your duration, like what portfolio goal you're trying to reach at a certain date, right? Because you want to back into all those numbers to see, how you want to properly size positions when you buy something or sell something, right? Gold Bitcoin chart. Yeah, Bitcoin has been outperforming gold, but it has lost some strength here. So that is interesting. Raymond, what altcoins are you looking at right now? For those that don't know, Raymond he has his own crypto research community, and
Um,
he likes to use our group to help him out with some of the directionality with the markets. So, what's up, Raymond?
100%, and I'm learning a lot. Thank you so much for this. Am I allowed to just drop a watch list for coins just for this week? The
I mean, you
volatile.
don't you don't have to you don't have to like drop any crazy ones, but I wasn't sure if there was like a specific crypto that maybe you were looking at or anything like that. That I haven't seen that might be in a bullish trend or something like that.
Cloud looks interesting.
Which one?
Cloud,
Is that the ticker?
CL. Yeah.
Is this a what kind of crypto is this one?
Not sure what it's gonna do. I'm totally honest. I don't know what it does fundamentally,
Hmm.
but the technical analysis was saying that it's gonna get sent this week.
Interesting.
Yeah.
I do have it as bearish trend in my model here, but who knows? Looks like it's getting down to where it was in August. So wouldn't be surprised if it had a big bounce.
Yeah, these things like have silly bounces, like 20, 30%. We just know how to catch that trade. And then you push on, it's coming back down. You open short.
For sure.
Um, but that's just like my process, right? I
Hmm.
find the tight weekly pivots for the coins
Hmm.
and those for that week.
Gotcha. Yeah, the thing that has me worried about altcoins right now is this chart right here, which I mentioned a little bit earlier, but um,
Same as that weekly support. It's a problem.
yeah, this is Tether plus USDC dominance. And really the last time that you had a big bounce was essentially from the peak in Bitcoin's price at the end of March of last year. And then the bottom was when Bitcoin bottomed in early September, right? So it's pretty much an opposite correlation, but usually when stablecoin dominance starts to rise, that's typically an indicator that like people are like crypto investors are like fleeing to safety type of thing, right? Um, Obviously it doesn't go up like this in a straight line. There's pretty big swings here. But this was a clear bullish trend that stable coins were in for pretty much the entire um, slump of the second half of last year, or I guess from March to September, right? As soon as this broke bearish, that was when we started to see like if you bought Bitcoin right around here in early October when stablecoins made their lower high, like that was the time to really go aggressive because stablecoin dominance dropped off. And then that was October 4th. If we look at a price of Bitcoin's chart, October 4th, yeah, that was like right here. So, but now that stablecoin dominance is starting to like become more bullish, That's really what's making me a tad bit nervous for the cryptocurrency market. But who knows? Maybe it continues to go down from here. We'll see. But that's the
Um,
biggest risk.
one thing I also find pretty interesting is the NVIDIA Bitcoin chart. And
Ah,
whenever that the right way, um, it's altcoin season. So if you put that on the weekly, and then you mapped out all season two, it's about the time when they're not working, when it's the opposite completely, right? Like when Bitcoin's rampaging against it, it's all season at that time.
when you said when Bitcoin is going up,
Yes, against it, that's
hmm,
all season. I've noticed,
interesting.
or or vice versa. I just because I'm usually looking at the Nvidia against Bitcoin chart. So here it's Bitcoin, Nvidia. So I assume it's just the opposite.
Yeah, I mean it looks like it because I mean 2017 that was a huge altcoin season.
Yeah,
Um, this was March of 19, October of 2020 to March of 2021. That was a huge boom. And
and
then
now
yeah,
look, if it breaks out, what from here we could break up. It
that's
looks
true.
like because this is we're in a downtrend, right? If we actually break this back test and push off, it should happen, and it should. If it doesn't break out, we should not expect all season.
Hmm. No, that's an interesting chart there. I mean, I have the chart saved, but I didn't know that that was a correlation with alt. So that's good to know.
Good chart. Then always check out the others chart. Others.t. Always solid.
Oh yeah, for sure. Yeah, this one doesn't look as bad.
It
At,
doesn't look too healthy either.
yeah, we'll see what
I'm
happens there.
break a structure with a back test, essentially.
Bitcoin miners. Yeah, Bitcoin miners are at the top end of its range there, but Stuart, you're absolutely correct. It has started to pick up some steam. So what was interesting was from its rally, from its bounce from like here to here, right? You had this huge ramp up in volume, and then ever since, uh, how it still made an all-time high, or not all-time, I don't think, or yeah, it was actually on. What was interesting is that it did this on lower volume, so that was like your hint one of like, okay, prices are going up, but volume is declining. That's a bearish divergence. So like that would have given you the signal to start to take some off the table around this area because you know you were still at elevated prices, but volume started to drop off, right? And then this drop happened, and you had a spike in volume, and then it went back down on lower volume, and it is volume still remains in a bearish trend for Bitcoin miners. Um, what is interesting is that you're starting to finally have a positive net cumulative volume, right? So for those who don't have this one on your indicators tab in TradingView, this is just the net volume of positive and negative volume by Raphael Ziani. That one's typically a good one. Like if you were just using net cumulative volume, which I don't recommend, just for the sake of this argument, if you were looking at this, like when it started to go negative here, that would have been you would have been selling at a decent spot before this drawdown. But now that's actually positive. That's good for the price.
Now this one, if you just match the tops with the bottoms, and it's just a range. pretty easy way to catch the bottom and the top.
Bitcoin miner revenue.
Hmm.
Interesting.
This one's a secret. I'm just giving it to you. I actually don't even give it to my people.
Oh man, giving us the alpha ray.
Check out the range. Look at the tops and look at the bottoms. And it's easy. Just trade this chart.
Yeah, interesting. I like it. Hmm. Yeah, this is sweet. Miner revenue.
It's actually odd how from different cycles it's kind of about the same. It's just a range, a really big range, looks like. Like I wonder when it actually breaks this range.
Yeah.
That's a lot of years. That's from like 2013.
Kind of looks like kind of looks like that diminishing returns chart of Bitcoin.
Hmm. Yeah, I just set up alerts anywhere on the top. Just let me know. Anywhere towards the bottom, let me know. Like I just need to know.
Sweet. Yeah, so I'm not sure if anyone else has any type of either, cryptocurrencies or stocks that you guys are looking at. I know that one thing that we've been long, pretty much this has been on our list since I think we added it around like $26. Chewy has been one that's been doing very well for us over the past few weeks. Since we added it to the selection, it's up nearly 50%. So if you guys haven't been able to have exposure to Chewy, this is still in a very strong bullish trend. So, I mean, even if it does, consolidate for, a month or so, you would have another position to hop in here. And, this is a company that has very good fundamentals. And when you take a look at, if you zoom out and kind of see where it's at right now, getting in on this on a decent pullback before it, really starts to launch again here. I mean, it's nearly 300% away from its all-time highs, right? Um, I'm sorry, that was actually not the right spot. It is 200%, which is still a 3x. So, not to say like go ahead and buy it here, right? You don't want to chase green. But Chewy is just one of those things to keep on the watch list. And if it has a decent correction like it did here or like it did here, those are great times to buy. So just put this on your watch list. Amazon, another one that's been doing very well in terms of the mega cap stocks. Let's see what else we got going here. The Glass House Brands marijuana stock has not been performing as well as I wanted it to, but I mean, this is a very, very long-term hold. The position that I have is at a minimum, so it's okay. But if this does reclaim bullish, this thing is just going to rip. This is one of those things where, if Trump if Trump passes like a pro marijuana play or like a pro marijuana executive order or get something passed that has anything to do with influencing the new scheduling of marijuana to a class 3 drug, then this thing is going to go up like crazy. You know, there's a lot of other analysts that are way smarter than me that have a lot of big bets on this thing, and yeah, I mean they have it like going way up to like $100 or something. Um, but this is just a super long-term play that I'm holding. Rolls-Royce ready for a pullback? What's the ticker on Rolls-Royce? Uh, yeah, I mean, it looks like it's getting closer to the low end of the range. I'd probably wait a little bit to put a position on, but it's only had one down day. But it's definitely in a clear bullish trend, that's for sure. Nvidia has been a little bit sideways. It did reclaim bullish trend, but I mean it's barely hanging on here. I mean, it's really been flat since the end of October. So, you know, what's interesting is that, Nvidia's customers, its biggest ones are, the large mega caps like Microsoft, Google, things like that. So, it's really interesting how NVIDIA is part of the Mag 7, where its main clients are also part of the Mag 7. So it's like a super concentration in the concentration. I'm sure there's a meme out there somewhere where it just shows how everything is reliant on NVIDIA staying bullish. But I'm a firm believer that if things keep going and NVIDIA remains strong, then, that's a very solid backbone for the rest of the market to continue going up. I would get pretty, I would get nervous for the entire market if Nvidia ends up really breaking bearish. But it's isn't showing that at all. What are your thoughts on medium to long term USD Canadian dollar, both Fed? Um, I guess that depends. I mean, I know that Canadian inflation has been coming down, right? So if the United States Fed remains hawkish and the Canadian central bank remains dovish, then obviously that would be very bullish long term, dollar versus Canadian dollar. But um, let's see. Yeah, I mean, as you can see, I mean, the Canadian dollar is severely bearish. Um, but who knows? I mean, I wouldn't be surprised if something caused this thing to have a little bit of a pop up, right? Something like that would be if the Fed came out super hawk, or I'm sorry, super dovish, right? That would get this chart to go up. Um, so we'll see what happens there. And that's interesting that you bring that up because it does play into part of like the setup heading into the week, right? So I mean, if you look at this on a longer term trend, could the Canadian versus US dollar go lower? Sure. But I mean, the majority of the time it's been higher than these prices, and the only time that it's been lower is just around this portion between 1998 and 2002. So, yeah, I mean, and then most recently, when it came down to these levels, it was very short-lived, right? You had a pretty quick rebound rally after these levels. So, I think the next couple days are going to be key with observing how currencies as well as the bond market are getting set up into the Fed meeting. So that's what I'm going to be making mostly my content about for this week, right? To start the week at least. And for those of you that don't have what I'm looking at here, this is the global macro dashboard for Macro Optics. Um, Part of the reason why we're able to look at all these markets all the time is because we want to stay organized on TradingView, right? And so if you guys if you guys haven't done this already, I would, but I would just go to our resources tab where you can, download and gain access to the global macro dashboard. That way you have this exact list here already ready to go, like preloaded, so that you don't have to, add all these manually. For those in the school group, if you go to the start here, I believe it's, yeah, you can click on the global macro dashboard um, text file. So you download that. Kind of looks funky. Don't pay attention to the way that this is formatted at all. But once you download it, then you would just go back to your trading view. You go to where it has the right here where it says import list. You just click import and then import that file. So if you guys
Do you,
haven't done that,
do you have that in this? Do you guys have that in the Circle community? Because
yes.
okay, when I went to do it, I didn't notice any. I know you gave a list of symbols there, but I didn't actually see that import file. But maybe I didn't get far enough yet.
Yeah, so in the let me see here. Yeah, it's in the macro toolbox there.
Perfect. Okay, thanks. Yeah, when I was going through the course part, I didn't. It was in the video, like the list of stuff to add to your trading view. So I went through all that and did that. But okay, so it's in the toolbox section.
Yes, it should be there.
Okay, thanks.
Oh, okay, I see. It's technically in a Google file within there, but I'll just explicitly put it in there. But yeah, what other questions? Do you have a video explaining how to analyze the bond auction results and its effect on the market indexes? I don't. Yeah, the bond auction results, you know, if it's like a crazy outlier, then, maybe it'll have an effect. But with that, what I've just noticed is that if you have the trends correct, it's a lot better. Meaning, like, for example, if you take a look at like the current trend has recently been that short duration treasury bills have been taking priority over issuing long-term bonds, and that's something that they can't get away with that for too long. Um, so that's one thing that's also making me nervous is that there's a lot of debt, government debt that's set to expire this year. And so, like, I'm just not sure how much debt that they can issue this year compared to last year. I mean, last year they printed a lot of money, right? Um, and you had the $6 trillion in money market funds just buying all that up, you know. So, what Janet Yellen and Jerome Powell were doing together in terms of the financial markets. There's obviously a lot of funny memes out there, but in terms of the financial markets, they were 100% manipulating bonds and stuff so that, they were able to prop up the markets. So, I mean, if you have a reversal of that, I really don't know how Bissett, which is he's the new Treasury Secretary, how he's going to navigate that. I think he's just starting to unravel like what they were doing. Um, and he was like, "Whoa, this is this is really messed up here." So, um, the reason why I'm smiling is just because, like, we've been looking at this stuff for quite some time, and it's like it's so bad that it's funny, you know. Um, yeah, that's really my thoughts on that. I'll try not to get too political, but um, it's just amazing how like these elites they have no problem. Like if it's ever a choice between actually having pain in the markets versus just, devaluing the currency over time, they're going to take the devaluing the currency over time because they absolutely cannot leave Washington because they don't really have any other skills besides being bureaucrats. And so if they lose their seats in Washington, like, that's all they have really. So really, it's going to have pretty crazy long-term effects because you can't just kick the can down the road for this long. But, you know, I think that the current fractional reserve banking system has proven that it can take on a lot more debt than previously thought and still not break. But at some point it will, you know. And this is really putting on my tinfoil hat. But, if you go back, I don't know if you guys have read that Fourth Turning book by Neil Howe. Um, but essentially, if you go back, thousands of years, you can even see pretty much since the invention of fractional reserve banking, which for those that don't know, it's essentially where people were bringing in their gold bars, their physical gold, to banks, and they were like, "Hey, bank, here's $10,000 of gold. Instead of me lugging around this gold everywhere, can you just give me a paper representation of my $10,000 worth of gold because it's a lot easier to carry around?" Sure, here's your greenbacks. And then over time, the banks were like, wait a second, these people are never going to get their gold back, or they're never going to want their gold unless there's like real crazy crisis. But I mean, things are pretty good right now. They wouldn't even notice if, the $10,000 worth of gold that we have physically, they wouldn't even notice if we handed out and loaned $90,000 worth it, right? So that's where the 10% reserve requirement comes back in or comes into play, right? Essentially, with $10,000 worth of gold, you can print $90,000 and thus you've essentially, created $100,000 in more money in circulation with just $10,000 worth of hard currency, the gold reserve. And that's kind of what, you know, that's a very small example, but that's what essentially happens with these crazy debt cycles, right? And the thing also, too, as debt gets paid off and those hard assets have, there's no more debt associated with those hard assets, right? Whether that's a house or anything like that value is locked in. That's what also brings the prices of assets up higher, right? That's why like we pay attention to the amount of credit that's in circulation, M2 money supply, all those different things as it relates to inflation because all of it is connected. And you're really not going to have a pleasant ending to this fractional reserve banking scenario that's going on. And going back into Neil's book, he talks about how governments and central banks would collaborate to like start these wars that essentially would rewrite the entire world power scale, and it would be a credit wipeout event. Whether that's World War II or anything like that. Um, Even with like, and again, I don't like putting on my tinfoil hat, but there was going to be a huge recession in like 2002, but then 2001 happened. 9/11, we go to war. There's all that oil that we find over there. We're able to, essentially there was like a bank bailout because of that. There's a lot of things that happen with the banks that are pretty evil, and so just recognizing that system that we're in, we're eventually going to get to that point where you can't kick the can down the road. But I'm not sure when that'll happen or the magnitude or how long it'll take for that. But that's always something that's in the back of my mind. Um, but there's no point in trying to predict like when those things happen because you don't want to miss out on the markets. You just want to know if you start to see cracks of it, right? And I forget which historian said that risk happens slowly and then all at once. And so, just like in that movie, The Big Short, how Michael Burry was starting to see like all these really crappy uh, um, mortgage-backed securities, right? Basically, they were grouping these mortgage-backed securities into these like AAA rated debt vehicles, when really, when you took a look at it, they weren't AAA. It was just a massive amount of junk that was in there. And so people were buying stuff that they thought was worth a lot when it really wasn't. And so people started looking and they started to see a lot of the cracks in the system. And you think of, I don't know, people who like to look at materials, and this goes back to my engineering days, but there's this thing called tensile strength, right? Whereas with different materials, you have stronger materials than others. But even if you take like something like like think of like a thing of spaghetti that isn't cooked yet, right? It's right out of the box. It's very stiff. I'm sure you guys have played that game where you bend the spaghetti straw, and then when it breaks, it's pretty all of a sudden, right? But what's interesting is that, and you can look this up on YouTube, but if you really zoom in with like a microscope on when you're bending that spaghetti straw, there's very tiny, tiny micro cracks that happen just up until the point of failure, right? And so if you see that, if you really zoom in and you start to notice all of the, millions of micro fractures that start to happen, it happens long before the spaghetti actually snaps, right? And so when we're looking at this macroeconomic data, part of it is you want to try and observe a lot of these micro fractures because you get a lot of warning signs if you know that you're looking at the right place. Um, we're starting to see a little bit of them, I think. But the thing is that like you just don't know how many like micro fractures there's going to be until it actually breaks, right? And so you can stay cautious, and as things get a little bit more weird, you can start to build a more cash heavy position than you would, um, equity or crypto exposure. But it partly goes into, I'm just like rambling right now, so apologies if you guys don't mind me rambling, but um, it partly goes into like why we created this group as well, because we have completely shifted out of um, a moderation period, right? We're like over the past 30 years, really since like early 90s until 2019, you had relatively low average inflation and low interest rates. Where right now we're heading like backwards, like pre 1990s, right? So in the 80s and 70s, where you had higher than average inflation and higher than average inflation rates. I'm sorry, interest rates and inflation rates. And so in that environment, it's just a lot harder for credit to be swinging around. And it is a tighter type of monetary environment, which, I mean, we're seeing it right now in the housing market. Um, People are scared to sell. People are scared to buy. There's a continuous housing freeze, and either sellers or buyers are going to completely capitulate, and that might be, a whole reason why there could be a credit event in the markets, right? If housing gets thawed out, it could go the other way though, right? If things start to get a lot better, then and wages start to keep up with inflation, then people will want to buy more, and then that will actually be stimulative to the housing market, even though prices are just still out of control relatively to where they were at, 4 years ago, pre-pandemic. I wish I would have bought some properties during the COVID stuff, but it's easy to invest in hindsight. We'll get other opportunities down the road. But
Johnny, was that book you were talking about? Was it the one with like the 80-year cycles, and
that's
then
right.
every 20 years? That's the one.
That's right.
So we're like in the crisis. We're approaching the crisis phase, I believe, is what the model was demonstrating, right?
Yeah, that's right. That's the reason why he was writing the book is because we're currently in the fourth turning, right? So there's four turnings. I think it's like I can probably bring up a graphic here, but it's like expansion. And you guys have it's just a sine wave, but it's like across like 80 years. Um, let me see if I can bring it up. But yeah, to answer your question, that's correct. Um,
Johnny, have you ever heard of this
this is the
gentleman
book, by the
on
way.
YouTube? His name is Clear Value Tax. His tickers. He talks about the Great Melt Up. Have you heard of that before?
I have heard of the Great Melt Up.
It's a four-part series this guy produced on YouTube. I could put the link if anybody's interested in it. But
Sure.
yeah, he kind of goes through pretty much what you're talking about right now and how we're on an unsustainable path that is due for 10% inflation every month over month, continuously for years and years and years until, we balance out this monetary policy.
Yeah, no, exactly. Yeah, definitely share that. I'd be interested in. I do have a presentation as well that I gave a while ago for I did a little like a tiny little conference down here in South Florida where I was invited to do a presentation on this topic, and it's somewhere. I need to I need to look where that is in my files there. Hmm. But yeah, lots of interesting books that are out there that also talk about that too. There's not just Neil Howe's book, but um
Yeah, Ray Dalio has the debt crisis books too, which
oh yeah.
are about the
Hmm.
same things.
Yep, yep. Yeah, Ray Dalio as well. Yeah, so I mean, those books you can't really let them scare you. It's good to be aware of it because it is, true. It's just like the timing aspect of it, you really just don't know. And you don't want to sacrifice opportunity. Because again, it's like if you just stay in cash and you aren't timing it right, then inflation is just gonna eat you up. So um seems like people like you and I are at a lose-lose scenario, you know. Um Staying cash too long, inflation gets you. Staying stocks and crypto too long, and then a crash gets you. Um, so that's partly why we have this group is to help give a little bit more clarity on some of these longer term cycles so that we can stay ahead. But um,
Do you ever use stop losses just in case?
it depends if I'm in like a very volatile asset, um, which I'm not typically in, but I have a lot of alerts set up as well. So, and I'm fortunate enough to where I can be like pay attention to it like during the day all the time. If I didn't, I would probably set stop losses, yeah. But you have to be careful with them because everything is on the order book. And so if you put a stop loss in, then everyone, knows where it's at. And so you could get swiped up. Whereas when, that's when your stop loss gets hit and then it just reverses and goes even higher. I'm sure you've had that happen to you or know someone
I
that
have.
has. Definitely
Yes.
had, it's definitely happened to me a few times. Um, so, you know, the process that we use kind of helps you like not have to worry about that too much. But it does help if you're good at them. That's also something is like I'm not very good at stop losses. Like I'm way more successful, me personally, when I'm just paying attention to it. And if something does have a dip, I can look at things and study if like right there in that moment, like, okay, this is lower volume. There's really no reason why it's doing this. This might actually be a good buying point. And so, I do like to look at those scenarios as they're happening,
Yeah, thank you.
but it's up to your personal preference though.
Johnny, would you be able to comment on the trailing stop losses? Um, in terms of would that be a better idea for somebody that is like me that can't pay attention constantly to the markets?
Um, I've never used a trailing stop loss. Um, I mean, I know like maybe you guys can help me out with kind of the difference between those, but I mean, I've never really used those before.
So basically, I think a trailing will just continue to follow, behind the stock upwards. So at your most, you would drop down to, like if you set it at 5%, at
Oh,
most
I
it would
see.
stop you out at 5, I believe.
Gotcha. That makes sense.
But so you're basically always giving up whatever percent you're setting it for
Mm,
because it'll stop you out as soon as you hit that.
Yeah, I've used trailing stops as well, and I've been stopped out way too many times. I don't bother anymore. It
gotcha.
is an interesting way to lock in profit at a certain point, but at the same time, like she said, you are basically promising yourself that you're going to lose whatever it is. Like if it's a 10% stop loss, trailing stop loss, you're going to get 10% then less than the high
I
because it
feel like
will
if
come
it's
back at
shooting
you.
up and you're like at 100% or something, it's probably not a horrible idea, but
Yeah, yeah.
As you guys can tell, I'm not a trader.
Yeah, the only time I've ever really been kind of successful using stop losses is when I use a bracket order, place a bracket order, so then I could have my take profit set, my stop loss set, and just let it do what it's going to do.
Gotcha.
And
Gotcha.
that way too, both our orders are sitting in the market, and people can see like that data on both sides.
By bracket order, are you referring to like the one cancels the other type of thing, or
Yeah, exactly. Because you
okay,
can't. It's the only way that you could set basically um, your your stop loss and your take profit um, lines, basically. So, um, yeah, because otherwise you'll get like an error. It depends, I guess, maybe what trading platform you use. But like if you use Questrade, like I do, if you try to set a stop loss and then a limit sell price, it basically says you're entering a short position at that, like after you've already set your stop loss, so you have to set it as a bracket order instead of trying to set two separate orders for one for your stop loss and one is your sell price,
yeah,
basically.
I know exactly what you're talking about.
Yeah,
Fidelity actually has those built in, which is kind of nice. So you can choose one cancels the other order specifically, and you got to choose your two price points. And if one triggers, then the other order cancels, and so on and so forth.
yeah, yeah. So anyway, they're pretty handy, but then again, too, the other problem with stop losses that I've run into in the past is I've had stocks shoot way past my stop loss and not have a trigger. So that's another problem that you might run into with stop losses.
Does that answer your question there, David?
Yeah, it does. Thank you so much, guys.
Anytime.
All right. Well, what we'll do is we will wrap it up there. ladies and gentlemen. And, as always, if you guys have any questions, feel free to leave those in the community or just send me a message and I'll be more than happy to answer those. And yeah, we will catch you guys next week.
All right, great. Thank you.
All right. Have a good night.
Thanks, Johnny.
Thanks.
All right.
Take care,
Bye-bye.
guys.